Money Morning Live. You have to love the energy that Brian King brings to the room. Always love listening to that man. But right now we're going to be hanging out with Tom Gentile. Yesterday we talked about Ethereum. Today we're focusing in on another coin and how that boot camp is going to support it. Let's bring in Tom Gentile in 5, 4, 3, 2.
Hey everybody, Tom Gentile. Welcome to Power Profit Trades. Wednesday, here we are again, middle of the week. It's a fast week. You know, if you were with me yesterday, we were talking about Ethereum. I was also showing you my long, short, intermediate term levels on Ethereum, as well as my upcoming, I got a little coaching thing going on too, Eric. You know, I love the coach.
I know you do.
You and I talk about him, you know, before we're coming on. He's transparent. He's real. I mean, you gotta love this guy. I got a coaching something that's going on involving coaching next week, starting September 12th. We're doing a cryptocurrency boot camp. And so what we're doing, guys, is you get to spend 4 days with me. You get to see what I'm doing, because there's a lot of stuff that's starting to generate. You know, we're starting to see consolidation happening. It's kind of like a coiled spring, Eric, where you're seeing Bitcoin and Ethereum, and they're all kind of crunching together. And you're going to get blast off. Blast off's going to happen. Now, blast off could happen one of two ways, but the reward to risk ratio right now on Bitcoin and Ethereum, especially where they've been to where they are now, is as good as I've seen it in years. It's been, you've got to go back before the pandemic to see the kind of reward to risk ratios that are happening right now, and much more so in other altcoins. So again, starting on September 12th, over a 4-day time frame, we're going to be going at it every day. I'm going to be picking a different coin or something in the crypto space. Might even be a crypto stock. And so I'm putting $100,000 into the crypto markets next week live. Come and join me. We're including software. Heck, the software alone, our best price on this software alone puts it above what we're charging for this crypto boot camp. So check it out, guys. There's a link on the screen if you're interested in joining. There's also a phone number on the screen. Eric, if you haven't put that phone number up there, that'd be great. So these folks that have questions on this can get into it. Today, what we're going to do is I want to talk about the state of the crypto markets once again. And I am going to just quickly review Ethereum, but I want to get into Bitcoin and the catalyst that's coming up, which is the Bitcoin halving that's going to occur. It's not occurring soon, but it is something that you need to think about real soon. And I'm going to show you why here during our half hour together. Also, my future projections. And of course, my 100K trading plan that I got going on. All right. And Eric, if you get a chance, can you pin up the link for the boot camp?
I'm working on that right now, Tom. We also have it on top of the player also for anyone that's looking to get into it. It's up there, but I'm going to pin it as well to make sure we get it for everybody. Yep, exactly.
All right, there you go. All right, I didn't see it up there. I'm looking at multiple screens here right now. But anyway, yeah, let's go ahead and let's rewind for just a minute or two. Let's talk about Ethereum. So yesterday, I was mentioning Ethereum. So this isn't an upgrade to Ethereum. It looks like it's scheduled to come out next week. All right, looks like sometime next week this upgrade is going to happen. And really, what we're doing is we're upgrading from POW to POS. It's funny. I hear the words POW. You know what comes through my mind, right? I mean, if you don't know proof of work, then you're thinking prisoner of war. And, you know, I took my wife to a doctor's appointment yesterday, and I heard this guy at the doctor's appointment. He said he was a prisoner of person of Walmart, or people of Walmart, a POW. They call them POWs. These are the old folks that now are not going to the malls. They're not walking around the malls. They're walking around Walmart because Walmart's such a big box store. And they call them people of Walmart. But the POW we're talking about today is proof of work. Going from proof of work to proof of stake, very, very, in its most primitive fashion, will lower the energy costs, will increase transaction speeds, and it'll also lower costs to us. the circulating supply on Ethereum is shrinking each and every year. That in its own causes supply to slowly drop. And we all know what happens when supply drops, even if demand stays the same, that arbitrarily pushes prices higher. Big banks are buying in. I talked about that as well. And then I mentioned proxies. And I said something yesterday, and I was looking at ETH and then ETC, and I think I called it Ethereum Cash, which really it's Ethereum Classic. My bad. It was me coming off of that long holiday weekend. But there you go, guys. This is what we're looking at with Ethereum. The catalyst that we're seeing with Ethereum is happening next week. What about Bitcoin? What about Bitcoin in today's topic? Well, in order to get to the Bitcoin catalyst, which really doesn't happen until 2024, we want to take a ride down memory lane. And I want you to look at the long, short, and intermediate term charts of Bitcoin. Then I want to show you what it looks like when you overlay Bitcoin onto the S&P 500. All right. And then we're going to talk about how this stacks up for the long term and that catalyst, which, although it feels like it's a long way away, something that is affected by that catalyst is actually right around the corner. So let's talk about the long-term chart. If you go back to Bitcoin, let's get the ugliness out of the way right now. The ugly is that Bitcoin is down about 73%. All right, down 73% from its highs. That puts us right back down in the high 18s, which is where we were trading just a little while ago. Those high 18s. Again, I'm taking us from the 69,000 high, all-time high that we had, and we dropped from 60. Now you got to go from November, right? From really the beginning of November to about the middle of June. All right. So that was a 7-month drop. You can see here how that went from 69,000 all the way down to those high 18s. And we've 1, 2, and 3 times those high 18s here. We're bouncing along there right now. It's holding up pretty well. Could it go lower? There's a very good chance it could, just to try to take out anybody who was buying above this. But the reward to risk ratio is getting better and better and better with Bitcoin. Let me show you what I'm talking about. 150-day chart. Okay, 150 days ago, Bitcoin was trading in the high 40s. And we had that drop off that happened within about 2 to 2.5 months, where we moved from high 40s down into the high 18s, where we've been bouncing and bouncing and bouncing. Take a look at the 75-day chart, though. 75-day chart looks a little different, where we saw an up run off the lows. Now, remember, high 18s was the closing. That was the closing low that occurred back on June 18th. We did stab all the way down to near 17.5. We also stabbed up above 25,000, if you recall, just a month ago, not even a month ago. And since then, we've had that pullback. Now, we're sitting right on top of that 18.9, 18.8, 18.9 area that we're seeing. But once again, let's think about this for a second. When you take a look at the long-term chart, right, what is Bitcoin? Bitcoin, as determined by the Internal Revenue Service, is an asset. And if it's an asset and it's taxed like an asset, maybe it moves like an asset. It used to not move like an asset, but how's it done in the last year? We'll take a look at BTC and take a look at SPY on top of it. And what you're seeing BTC and SPY really, really paralleling each other. I mean, it's not a mirror image at all. It's literally looking at a twin. And BTC, Bitcoin, has been acting like a leveraged SPY. So whatever the stock market's been doing, Bitcoin has been doing much more. Take a look, for instance, if you take a look at SPY, this was off the lows earlier this year, that we had 57% down, okay? And then take a look at the S&P was down 21%. So we were getting better than a 2-to-1 drop and, of course, rise. So you can see that that's it's about a 2.5 times leverage right now on Bitcoin that there is on the S&P. Now, NASDAQ was down at time 30%, but still close to 2-to-1 even looking at the tech-heavy NASDAQ. So the question that I ask myself when I look at those three charts, when I look at the 73, 74% drop that we've seen in Bitcoin, and I see not only the drop on the long term, the drop in the intermediate, and even the subsequent rally in the short term only to fall back down. What and how does this stack up for the long term? Okay, that's the question I want to ask myself. So what I did is I updated my tables from earlier this year. And I want to share with all of you what this looks like when you're looking at these tables and you're looking at, well, how, if Bitcoin is down this bad, should I just get out? Should I just, and you know what, folks, this is something that I know. I've known this for decades now. And, sometimes when things feel the bleakest, especially in the cryptocurrency market, that's really the time to step in and start looking at some long to even medium term potential trades. Let me show you what I mean. So what you're seeing here is three different adoption phases for Bitcoin, just Bitcoin on its own. So what we have is we have the early adopter phase, I have the retail trader phase, and I have what we're currently in right now is the institutional phase. Now, in each of these phases, I have the low to high, where Bitcoin went from its low to its high. I also have what that increase was, that multiplier. I have the pullback that happened after the high, and then I have what we call the correction percentage, right? So if you take a look here, this is that 2011 to 2014 phase, and this is the 2015 to 2018 phase, and then here we are, 2018, 2022. They're about 3 to 4 year phases when you take a look at each. So 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. All right, so here we go. Take a look at the low phase. What you're going to see is that early adopter phase. We had a 240 times increase from 5 to 1,200. But then we went from 1,200 back to 152. Big drop down, 88% drawdown from the high back to the low. The retail trader phase was that next 4 year phase, happened we went from 152 back to near 20,000. That was 120x return. But we also dropped from 20,000 back down to 3,300, 84% drawdown. Where are we right now in the institutional phase? From 3,300 to 69,000. That was a 21 times increase. It wasn't anywhere near the increase that we saw earlier. And I believe we'll see an even bigger increase. But if we reshuffle the deck, let's say that is it for the institutional phase and we go into phase 4. Then 69 took us down to roughly 18,000. That's a 74% drawdown. The questions that I ask myself after looking at this table is, are we at the bottom and have we even hit a parabolic top yet? So there are a couple of things I want to talk about. The biggest thing, let's just get it out of the way right now, is the next catalyst, which is coming, which is what we call the halving cycle. Now, about once every 4 years, roughly, Bitcoin halves the reward that goes out to miners. Started out at, in fact, when I got into Bitcoin, they'd already halved from 50 to 25. So we saw the 25 half go to 12 and a half. They half the rewards out to, so when the equations are solved, you're only getting, instead of 25, you were getting 12 and a half, and then from 12 and a half, you get 6 and a quarter. So now we're down to where the next halving cycle is going to come, and they're going to half the amount of reward you get as a Bitcoin miner again. Now, let me show you a couple of things, what I like to call the when and the where. All right, the when is Bitcoin's next halving cycle going to be, and when does the market bottom before that cycle? So if you take a look at the last three, all right, you've got the adoption, the early adopters, the retail adopters, the institutional adopters, and we saw that roughly 12 months before the halving occurred, we bottomed. 11 months before the halving occurred, we bottomed. 17 months before the halving occurred, we bottomed. So if we average all this up, this is going to be somewhere around 15 months, right? This here is where we currently are. And we've got a halving cycle that looks like it's going to be scheduled for about April 2024. what we're looking for based on our averages of our last halving cycles is we're looking for Bitcoin to bottom somewhere around the end of this year, right? Around the end of this year puts us really right around the holiday mark. All right. Now what that could mean is it could mean we've already bottomed and we're just going to kick along that bottom, maybe towards the end of the year, possibly. That's what we call the when. So when is the bottom most likely to happen? No guarantees, but most likely to happen. We think that is going to occur sometime in just the next couple months, right? The next question is, we got the when, where's it going to bottom? Let me show you another chart we have. Now, this chart's a little bit tougher to understand, but I want you to think about this. I take this big chart that you see here, and I just blew up this little piece right here at the bottom. And what that shows me is that we had a 2011 drawdown percentage that took us down below 5,000. We had that 2015 drawdown percentage, and then we had the 2018 drawdown percentage, which shows the drawdown could drop us down as low as potentially 11,000. Now, we've clipped 20. We've actually clipped into around 17.5. And so if I were to sum all this up, folks, what we're looking at is we're looking at a when, all right? When is happening here very soon, all right? Where is also happening very soon, and future projections look like this. I think Bitcoin's bottom, if we do drop below 17.5, I think it will flush out the remaining folks that are sitting there pulling their hair out somewhere above 15. All right. Now, there's a very high probability Bitcoin's already bottomed. Right. It's already bottomed. In fact, there's right now we're at 75%. 17.5 is 75% the all-time high. 15 would take it near 80. Now, I want to show you something else. All right. Because, we look at numbers. We're always crunching data over here. If you take a look back at these projections again, 88 to 84 to 80 would take us down around that 15 area. Now, I'm not saying we're going down 80%, but it's interesting to see how the corrections have fared in the last couple cycles, right? Next question. If Bitcoin's low is in or coming, if Bitcoin low is, if the low is in, if we potentially are hitting the right time and price cycle, how am I going to trade this? Well, I'll tell you all right now. I am looking at picking up some additional Bitcoin. I'm looking at picking up some Ethereum starting next week. But I'm also looking at trading a couple of other things as well. So what I talked about at the beginning of the show was that we're coming into something I like to call crunch time. We're seeing this almost, Eric, I was prepping for the holiday weekend, cleaning off the table, and you get the table outside by the pool. I was cleaning the table off. It's a glass table, so it shows dust more than anything else.
All right.
You take your bucket out there, you rinse off the cloth you're washing the table with, wash the table. Then I rinse it again, then I wring it out. All right. So what's happening right now is in cryptocurrency with a lot of what we're seeing, we're in a holding pattern right now. And what we're doing is basically, I'm really kind of wringing out that financial cloth, that financial washcloth. And what we're likely to see, and I'm already seeing it on a couple of not only a couple of coins, but we're starting to see a lot of the Bitcoin stocks. We're starting to see a lot of Bitcoin stocks offering buy recommendations. In fact, for those of you that are part of Microcurrency Trader, that's what we're going to be talking about at 1 o'clock today. I'm going to go through every stock that we see that is offering up buying opportunities, which could be, because remember, Bitcoin has been really the leader in the stock market, but we're starting to see that trend reverse, where Bitcoin stocks are now the tail that's wagging the dog. And so how am I trading this? Take a look. Couple of different ways, because yes, I'm a holder of Bitcoin, I'm a holder of Ethereum, but I'm a trader of many, many more. And we do a 3-step process when we trade these. Step 1 is something that all of you in the room can do, right? I use Fibonacci levels. I use Fibonacci levels to gauge the areas of where we are, okay, where we are in that phase. In fact, if I do Ethereum, if you missed yesterday, let me throw an Ethereum chart up real quick, Eric. So I want to show everybody the Ethereum chart. And I want to show the 75-day chart. So the 75-day chart shows the lows in Ethereum just below 1,000, and it shows that run up where we closed very close to 2. And then we pull back, and we pull back into this, I call it the cautionary zone, right? So of the two, I believe if you're looking at which one is the stronger, you look to the 75-day chart, and you can see that Ethereum is definitely the stronger of the two. Now, yes, it's down 4.5% today. Okay, Bitcoin's down as well. Right, I think that maybe we might be starting to flush out some of that buy the rumor, sell the upgrade. I think that might be coming early. That's great. I love that. I want to be buying Ethereum next week when my signals tell me to and getting it at a better price. But as you can see, the chart for Ethereum is much stronger. Bitcoin's chart has come back down into the red zone and is really kind of triple bottoming, where Ethereum had some lift off of 1,000. It was very cheap at 1,000. Ran up to 2, pulled back to just below close to the 1,400 mark, and it started to run back up again. So this is all based on a Fibonacci chart, folks. Okay, so I wanted to share that with you first because that's step 1 of the 3-step process that we do. Step 2 is that we're looking for something we like to call currency waves. Now, currency waves are 2 different moving averages that we look at and moving average crossovers. I'll give you an example of moving average cross. So one example of moving average cross would be a 10 and a 30 period moving average. Now, I use this in the stock market quite a bit. In fact, it's the first 2 lines of code we use for quantum. And any of you in here that are following quantum, you know how that's been doing. That's been killing it. So we use that as a benchmark for currency wave. But here's the thing. Unlike the stock market, the cryptocurrency market is very, very volatile. And therefore, each crypto has its own fingerprint on which currency waves work the best for it. Now, not only do we look at optimizing those currency waves, but we're also looking at the depth of the move. So as you can see here, and this is very similar, you see this move up and this move back, these bars. This is moving average convergence divergence. So we do utilize that in the cryptocurrency space. So one of the things that we can do, and our software can do, is find which of these currency waves, what numbers on the currency waves fit best for each cryptocurrency. And then number 3, and this is something that we do and only us, we're able to use something called darknet channeling. Darknet channeling looks at channel collisions, where we're looking at long, intermediate, and short-term channels. Like you see here on the screen, we call them the precipitation days, parallel days, and propulsion days. And as you see, when we see 2 or more, we see multiple channels colliding on the buy side, we get a buying opportunity. And so I was just sharing some data with the president of Money Map Press. He was asking about this, and I was sharing some data with him on the stock side, and he was very pleased at what he saw on what this can do with stocks. But this is equally effective in cryptocurrencies, where we're looking at this short, intermediate, and long-term collisions. Now, how is all of this done? All right, when we add this up, guys, I got to tell you, in a bear market, all right, which is really what we're in right now with cryptocurrency, I think we're at the tail end of the bear market. But we've been able to capture some really nice gains. In fact, since 2018, we've had nearly a 90% win rate and about 92.5% return on investment on cryptocurrencies. These are just a few of them that you see on the screen, but many, many more. And when we started tracking this, we started tracking it, if you recall, back in 2018, Eric, I'm sure you remember, that was the top of cryptocurrency at the time. We saw between 2018 and 2020, the market was dropping then too. So, when you look at this is the difference between the buy and hold. Someone who bought and held in 2018 to 2020 to March of 2020 wasn't feeling so good, but yet by trading these coins, when we use things like, the overall Fibonacci look, currency waves, and of course our darknet design, our triple stack compression. That allows us to get in. And we've had, this is just a couple of what I like to call our cryptomaniacs that have followed us in our most recent moves that we've had here in 2021, 2022. Because of what we're seeing, because of the collisions, because of the pullbacks, because of the reward to risk ratios we're seeing right now, and I'm seeing probably a minimum 10x on Bitcoin, and even more so with Ethereum. That's why I'm stepping up and adding another $100,000 to my portfolio of US dollars. Yes, I mined crypto back in the beginning. A lot of people say, "Oh, you were lucky." Let me tell you what they were saying back then. They were saying I was crazy. What are you doing? That's crazy, right? Beware of someone that people call crazy, because crazy can go, hey, you know what? Radio waves? What? People can talk to each other wirelessly? That's crazy. I could give you a dozen different that's crazies that actually turned out all right. Cellular phone calls? Are you kidding me? That's crazy. You could just go on and on and on. But I am putting $100,000 into crypto next week, starting next week. You want to join me? You want to see exactly what I'm doing and how I'm doing it? I have got a 2022 crypto boot camp that is coming. This is once a year. I don't know if I'm going to be doing it after this year. I did it last year. I promised folks I was going to do it again. This is a 4-day boot camp. What we're doing is day 1, I'm going into essentials and what I call my trading level strategy. Day 2, quick review. And we're going to show you how we do the currency wave trades. Day 3, another review and the darknet trading strategy. Day 4, crypto stocks. I also want to show you my action plan, and we're going to be doing a lot with my software, which also means we're going to be giving members software. We're going to be giving members software. You're going to get the crypto level scan. You're going to get the crypto darknet signal scan. You're going to get the currency wave scan. You're going to know how to do it, because we're going to spend half of our time together scanning. And so that you can see what you're getting for results, what I'm getting for results, match. That's the plan, right? Also, if you take a look here, guys, my tools, these are the same tools that I used as I was building my account. They're the same tools that we used to have the kind of returns we've had since 2018 with Microcurrency Trader, the 96% average gains. So we're giving those tools to everybody. We're giving you 3 months of those tools. And to get 3 months of those tools, I could sit here and I could tell you all day long how much time this cost me, energy this cost me. Forget all that for a moment, okay? That's all extrinsic costs, all right? Hard costs are this. We charge $199 a month for our tool set, which is going to be included. Those 3 months tool set is actually more expensive than coming in, getting 3 months of those tools as part of my cryptocurrency boot camp. That's hard. That's a hard value right there. So when you look at that, and then you add on a couple of other things that we're doing, which is also including the apps. I've got a phone app that I'm going to be sharing with you, a couple of them actually. Limited time offer, $495. This is an 80% off deal. Heck, crypto's down almost 80%. Why not do an 80% offer for folks that are interested in joining us? So that's what we're doing. If you want to come along with us, guys, the links are on the screen. You can call Gabe. He can walk you through and answer any questions that you have. It's a very simple process. You're actually going from you to me, okay? This is a direct educational event. That means you have you've got my email address, my office number, our Skype address for those of you that are outside. Money Map is allowing you to go direct to our company. So that way you're bypassing, if you have questions, etc., you come straight to us. How easy is it to sign up? You click the link, you go to our PayPal page. If you have a PayPal account, it's very simple. Log in and pay that way. Let's say you don't have a PayPal account. That's okay too. There's a little button below login that says pay with debit or credit card. Click that, fill out the information. You'll see at the top right-hand corner, the discounted price is already there for you. All right. So we're going to have a lot of fun next week as I'm putting $100,000 to work in various areas of the cryptocurrency markets. I hope you can join me. And like I said, we'll have your software ready to go by the end of this week so that we can hit the ground running starting next week. All right, I am out of here. I'm back at 1 o'clock for those of you that are microcurrency members. We're actually going to look at crypto stocks at 1 o'clock and get an idea what they're doing. I'm going to show you some scans, might put a couple of trades on in the crypto stock environment as well. Otherwise, hope to see you next week in our boot camp, or I'll see you here again at 12 o'clock. Bye, everyone.